XRP seems to have hit a wall. In this video, we're going to be jumping down into the technical analysis for XRP, taking a look at what has been going on most recently and what I think is likely to happen next. Let's see if we can get the likes on this video all smashed up to well over 2,000 if possible. That would be absolutely amazing. If you're new, subscribe. Let's get into XRP analysis. Here we have XRP paired up with USDT on the hourly chart, and Binance is our data source. And from here we actually have entered into our kind of big zone here, this supply zone. This is an area that we can kind of zoom out on just a fraction. You kind of see as being an area of previous kind of buying demand. We lost it, it turned into an area of selling, and then up here is where you can see as well we've turned it into selling zone. Now a selling zone or a supply zone is basically just an area where people are feeling like they should sell. It's like a premium zone. It's an area where basically you're paying a premium if you're buying in there. Okay, and this is an area that most people tend to want to sell into. So let's go ahead and take a look at this in a little bit more detail, because there is this wick right here, right? So basically we come up into our supply area, we consolidated, we hit this high point just up here, which was 21.66 cents according to Binance, and then we fell all the way down here. Okay, now this is really important because if I come up into our daily chart, you can see that this is the wick that hit our trend line, and this trend line is something that we've tested a number of times already. So we can see here, 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 and this was the fifth one. Now, I'm not saying that this is going to necessarily hold, because there's still a lot of upward momentum to be had on XRP, but it has been rejected from this trend line. The trend line that was rejected 4 times before, this is now the 5th test of this trend line, and it looks like it rejected beautifully. So we want to be aware that that's not overly the most positive thing in the world, but there is still momentum to be had here, and you can kind of see how perfectly that hit on the trend line there. This one's actually a little bit off. This one's a little bit off as well, so I could probably finesse these a little bit if we wanted to, but really good on there. Now, the white line is the 200 EMA on the daily. Okay, so it takes the last 200 candles on the daily chart and basically just tells us the exponential moving average. And this historically is also an area of resistance, and it did coincide here as well. So we can kind of see how we're going to battle this area. I think, if we do break the trend line, which, trend lines are weak anyway, we're going to really dance around the 200 EMA. That's going to be the most important one. You can see the 50 EMA is acting as previous resistance turned to potential support here. So we are finding ourselves sandwiched between these two. Now, getting across a golden cross between the 50 and the 200 EMA would be deemed positive, but we aren't there yet. That's probably several days, weeks, months potentially out. So keep that in mind. From our weekly standpoint, we can see that we have got a death cross looming here. So again, not looking too positive from that standpoint. So keeping an eye on that weekly time frame is going to be key. Now, from our hourly chart, let me just bring this back up into view. So that kind of makes sense, right? We're going to have this high point up here. We had the low point coming down, obviously getting rejected from that trend line. So we can understand why and what was going on specifically there. Not only did this occur, but we also see stuff going on as well with Bitcoin and with the DXY. So all of these things combined, come together quite nicely to see, some fantastic gains being made if you're shorting off that trend line, for example. Now, in terms of our structure, it does look like we have a corrective coming down here and a move up here. I'm just going to simplify this by taking a look at this level here, move this over to this one right here, and we can see this was slightly pushed higher than the 882, but slightly short of the 1-to-1. I'll quite happily mark that there as a complete structure without having to worry about all those internal counts. And then we can start to think about what's going on here. This pull down, we pushed up, we still haven't breached this low. So ranging is where we are right now. Okay, so let me draw a couple of trend lines on. Do I need this one? I'll leave that. I'll leave 41.94 on there for now. Actually, no, I'll get rid of it. Let's start again. Up here, I'll make this white, and I'll take this one down here as white. So basically the high end and the low end of this candle, okay, taking these two wicks. This is basically where we are at the moment. And the wave counts are a little bit off here. Okay, so straight off the bat, we've kind of got two options. We've either hit this low point, come up here, come down here, going to break up to that higher end. Alternatively, we are in a move to the downside where we've come down, we've come up, and we've got to come down. Both of these are technically possible. okay? And yeah, there isn't really a nice and easy way to kind of say one outpowers the other. I would personally think that the bearish one should sit better, mainly because of this B wave structure coming down here. It doesn't really look like a B wave structure to me. It looks like 5 going down, so I would expect a zigzag, so 5 more down to come into this kind of C wave low point, lose the 50 EMA, which is acting as support, and come down and find support on the 200 EMA on this hourly chart. Okay, but it's a gamble, and that's why ranging markets like this, where you have multiple different ways that this market can go, you avoid. You do not bother trading these kind of things because they're incredibly risky. So personally, wait for one of these lines to get broken, and once you've either come up here, then your next move is down, or if you've come down here onto the 200 EMA, then your next move is up. Okay, so it's not about what's happening right now, which one of these you want to kind of trade. It's about whichever one of these lines, whether this is 39.6 and 7 at the bottom here, gets broken, well, the next move is going to be the move upwards. That's the one you take advantage of. Likewise, if the line up here at 41.66 gets broken, then it's the move downwards that you take advantage of. You don't really worry too much about the range in market. You wait for that to play out, get confirmation of the direction, and then go in the direction that follows it. Okay, so if we break upwards, then we're going to short the market by going down when we finish that structure. Likewise, at the bottom here, if we break down now, then we're going to go long because that's the next move. Okay, so try to think ahead rather than kind of, hoping that we're going to be gambling on choosing the right one. Now, 50-50 chance, obviously, but I don't like those odds. I like to have things a little bit more stacked in my favor, personally. So when it comes to XRP here, we are kind of just stuck in this little hourly ranging market. That's probably going to be today. I don't think that's going to play out quickly, but I could be wrong. From our momentum indicator, XRP is a little bit all over the place. Now, this can be problematic, but I'm hoping that things speed up a bit. Okay, so on the hourly chart, you can kind of see here that, the momentum's a little bit lackluster, right? It kind of shows us some momentum and then gets wiped out very, very quickly, right? And on the 4-hourly chart, you can see that we're almost down in the oversold area after doing this corrective structure at the moment. So that would be deemed positive, but likewise, if there's no volume behind these movements, we can kind of get wiped out very, very quickly and go back to overbought. So be cautious with those RSIs. Now, here you can see that the volume has dropped as we corrected, so that's a positive, right? If volume is dropping down like this, whilst we're in this corrective structure, i.e. we're going down, then actually it shows us that there's not many people willing to actually sell. So that's a positive thing. But, at the same time, volume hasn't been overly impressive whilst we've been pushing up. In fact, you can look at a macro trend here and say that volume has been decreasing as price has been going up here. And again, that does not bode well either. But that would be more of a macro kind of thing. So keep an eye on that. From an RSI point of view, if we take this up into our daily, we do have some concerns here. So we can take a look, right? We came up to this trend line up here. Okay, so we have this lower high on our trend line up the top, and we have a higher RSI. That would be bearish divergence. We talk about that quite a bit. So again, nothing overly too good happening there on the larger kind of time frame. So think about the smaller time frames potentially looking pretty reasonable, but the larger time frames not so much. Again, you can take a look at volume really trying to push up hasn't been great, but volume pushing down has been pretty decent. I'd be a little bit, there's a little bit of confidence coming back in, I guess, down here. So we'll see how that kind of reacts as we kind of get into the finessing of XRP over the next few weeks. But yeah, I'm not confident. I think we might pierce the trend line because I don't think the trend line is overly strong. But I do think that the 200 EMA is going to be the main challenge that we have here on the daily chart. And we are, of course, overbought. So I'm not expecting us to kind of actually succeed here. I think rejection is the key. And I do think we are likely to really struggle in and around this area. Not expecting us to push up terribly too much higher. And if we start thinking about where the resistances are, we shouldn't really be thinking that we have the ability to push up higher than 45. There's a lot of resistance right in there. I would suggest that actually it's probably not even going to get anywhere near that. So keeping an eye on it. We'll see how it goes. I think the 200 EMA at the moment is at 41.91, and the 50 is obviously acting as support. So golden cross potentially, but that's weeks out. I think we're going to get smacked down before we even have an opportunity to do something like that. From a weekly standpoint, death cross, as I said, is looming there, but plenty of room to grow on the RSI, stochastic RSI that is. So again, we do have potential here for a breakout. I just do not think that the rest of the economic world is going to allow that to happen as we get into February. So kind of keep that in mind. I think there's a lot to think about, and definitely want to make sure that we're on the right side of whatever does occur here. So make sure that we protect ourselves, make sure we're not on keeping too much capital on exchanges, good risk management, understand what's going on, and all that wonderful stuff. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new, subscribe, tap the bell, select all the notifications, and you won't miss another video. And don't forget to join us down in Discord, guys, linked in the description down below. It's a fantastic community. Until the next one, have a fantastic day.